Hello. Well, now that we are a few days into 2023, it's a great time to release a new module for Jackrabbit TV. So today I'm going to be introducing the CCI module, or the Commodity Channel Index. This is a momentum indicator to some degree, and it does exceptionally well in finding opportunities. So let's get straight into the chart and look at just what kind of profits this wonderful little module can bring. And before I get too far ahead of myself, I wish to thank Waffle Stomper for this wonderful algorithm, because it certainly does do a great job. First, let's take a look at the chart itself and look at the profits. So here we are, 4 trade cycles on the 1-minute chart. And it has a maximum number of positions per cycle of 8. This really is quite good, and it does exceptionally well with maintaining the risk level to a moderate standpoint. And as you can see, it's very, very controlled. Now, I've added a few twists to this particular DCA that make it quite interesting. But overall, it is a defensive state. So there's one full complete trade cycle starting at this point on December 22nd. December 27th is when this trade cycle started. And it went all the way up to this point, which was January 2nd, with a nice little tidy profit. So let's start out looking at the DCA module directly and taking a look at the unusual particulars that I set this up for. I'm using a sliding scale for deviation, and this actually works out very well, particularly with the CCI. Now, I've chosen to start out at a higher deviation and slowly lower the deviation as my accumulation picks up. Meaning, the more accumulation I have, the less it takes to make the next purchase. But that could just as easily be reversed, where I start out on a low deviation and I increase as my accumulations continue. See, these kinds of tactics really offer some very interesting defensive states. So as you can see, we went from having a max of 8 per position to having a max of 6 per cycle. Excuse me, that should be cycle, not position. So you can really tune the defensiveness of Jackrabbit in ways that just don't exist in many other products. Being an accumulation, you also mitigate your risks significantly because you're not going out of your way to take losses. So let's get this back to a full chart and go from there. So however you choose to actually shape your trading, you can either lower the deviation as you accumulate or raise the deviation as you accumulate. And you will control your risk. And that really is the number one most critical facet of trading. You need to control your risk. Now, coming off of that bear market that started November of 2021, we really took quite a beating last year. But this indicator and these techniques can make money in any environment. Particularly when the market is so unstable, there is also another facet that needs to be looked at. And right now, even for me, shorting the market certainly seems to be a good idea. So here we see the exact same strategy in short. Now, Waffle Stomper's algorithm has a unique twist to it in that it has its own shorting system built into it. So that gives the relay module a lot more flexibility. And in fact, let's take a look at that. Here is the CCI itself. And let's really look at some of these settings. So as you can see, a lot of this is pretty much straightforward Jackrabbit. But you see some interesting twists like the long-short CCI logic. This has its own shorting logic built into it that can take advantage of opportunities specific to its own internal mathematics. That's important because you can really hone in on those unique situations. So let's see what that looks like. Now when you go to shorting, you need to also make adjustments in your max buy levels. And you need to set it appropriately as well, so that it is tuned for the shorting mathematics. So as you can see, it adjusts everything. And you can see the settings that I'm using that I found that work well, for my own particular risk assessment. Again, you're looking at a framework of unlimited potential, unlimited possibility. You can make this incredibly aggressive. For example, and you see the entire chart changes to a much more aggressive state. Now let's see what that looks like on the bigger picture. And you can see that we have a maximum of 1 buy per cycle. So let's go ahead and put this back to the long state. See how well it looks compared to our previous results. So you have two different ways with CCI of calculating short information. And it really does give you opportunities. Okay, so now that we have gone back into the long state, we have 5 trade cycles. We have a maximum of 3 positions per cycle, so we became even more defensive. So there are a lot of interesting facets to how you control the CCI and how that affects your trading. Let's see how else we can tune. Let's take the CCI down to 14. So as you play with different types of settings, and you see just how well things work, you can get an idea of just what your risks are going to be based upon these settings. So coupling the CCI with the MACD has really proven to be quite powerful and is proving to be very resilient to a lot of market conditions. Now, if you turn off the trending, you'll get even more various settings that can be tuned appropriate to your risks. I've got this one pretty well set to be very defensive, but still quite opportunistic. Of course, MACD itself is just my classic style for MACD. This has been one of my favorite approaches, and it's always done well with various types of trading structures. Okay, so let's see how this looks on a few varieties of different assets and see just what we can accomplish. So let's go back to you can see, for example, some coins are going to have a much more aggressive state than others. So even though we have a maximum of 10 positions, we have 4 trade cycles on a 1-minute period. That's not bad for such a defensive strategy. Bitcoin Cash is often difficult to deal with, and yet even it is still doing quite well. So while the market may have some unusual hiccups in it, there are always opportunities to take advantage of. And as you can see, with the level of limited positions, this is probably one of the more resistant ways available for being able to restrict the amount of purchasing that you do. Now, you can make this significantly more aggressive, depending upon how you do it. But really, considering the market, it's probably not wise to go too crazy with an aggressive state. For example, if we just go with a flat 0.3 deviation, we can see that the number changes drastically in terms of the visuals. But now let's simply do away with the deviation and go with a pure organic. And we're up to 28 positions per cycle for the maximum. That's quite a bit of aggression, but when you think about the amount of profit that this can make, it might be worth it if your risk assessment allows that kind of an approach. There are advantages to this kind of aggression, only if they are appropriate to your own trading though. And the profits are always consistent and reliable. Now, as you can see, without a deviation, it does pick up a significantly higher level of accumulations. That does mean more profits, but it also means higher risk. So you'll need to find a balance between that risk versus the reward of the profit. Personally, I think having at least some level of deviation is certainly worth the additional defensiveness that it offers. Even if it's just a tiny bit, it has a profound impact on the mathematics. We can see just how much it reduced the maximum number of positions just with 0.1% for deviation. We went from 82 down to 13 positions on this particular asset. And that is reasonably well. That will guarantee a much better defensiveness. Now, it's important to remember that when you're using this strategy or any other kind of strategy, that this is about patience. It's about waiting as well. Accumulation isn't a fast process, so I don't recommend coins that don't have good, strong market metrics. Realistically, this should be used on coins above 1 billion market cap, as they are going to be the strongest ones to survive any market fluctuations like what we've recently seen. But this can certainly be a good, clear example of just how well things can work out with the right amount of caution. For example, let's go from 0.1 to 1. Let's use a very defensive technique. So the more we accumulate, the bigger the deviation becomes, meaning the less we purchase. This is an interesting philosophy that allows us to really grow and change with the market so that we can easily make sure we aren't taking on too much risk as the market changes dynamically. The CCI indicator itself really has given lots of opportunities, and that's something that I encourage you to check out, and you'll find the link in the alpha testing area of the Discord support server. Waffle Stomper really did a bang-up job when it comes to this algorithm, because it just does a great job in mitigating risk and finding opportunity. And there are just so many ways that you can use this that I can't even go through and think of them all right now. I used MACD, but really Bollinger's, ATI, and RSI stochastic combination would work well with this also. There's just a lot of different combinations that CCI pairs well with. So, leave a comment, ask any questions if you have it. If you have them, be sure to check out my Patreon, get inside information, see what my thoughts are about the market, stuff like that. And I'll leave the links to all of that stuff in the description below. So enjoy this incredibly new way of making more money. Be sure to let us know if you run into any problems with any bugs in the algorithm. It is alpha testing. But until next time,